let's talk about the currency, where the Indian rupee has ended the day flat today, and even the strong rally in Indian equities have seen a bit of a turnaround. The booking on the Lal Street sapped some of the strength in the rupee. Also, the dollar has strengthened ahead of the FOMC meeting. That's what's weighing on the currency today. On your screens, absolutely flat, unchanged at 61.19 is where it shut sharp. Let's get on board then. Alok Singh, he's Chief Investment Officer, Fixed Income, BOI Eksa Mutual Fund. He joins us with his take. Also joining us is Kanhaiya. He's Director, Senior Currency Strategist, Forex Institutional Sales at Scotiabank. He joins us from Hong Kong. Sasha, you go first. And what are your expectations from this week's FOMC meeting?
I think given the most recent employment data that we're probably tracking another $10 billion in total asset purchases to be tapered. I think the thing to look for is the tone in Chair Yellen's communication and also any shift in the economic forecast, which could have policy implications for the pace of further tapering going forward.
Alok, what's your sense? Most people say that $10 billion of a tapering yet again is quite a given.
Yeah, very much. Market has been discounting that, and I think looking at the data, the recent data, I think that is quite possible. I don't see any issue with that.
Alok, given that as the market sentiment right now, how much of an impact do you see of that coming in for the rupee? Because while we saw a volatile day, the closing hasn't done much.
Well, at this point in time, immediately I don't see pressure coming because of tapering onto rupee, because rupee is moving more because of the domestic issues in terms of the election result, and market expecting a more favorable government than it was previously, and that's what has resulted in this move. And I think that is weighing over. That will weigh over any of maybe the FOMC tapering or anything at this point in time. So immediately I don't see anything getting impacted because of that. Yes, in the longer term it do impact, and I think by the time we shall also have a government, and let's see how it fares compared to the market expectations.
Another thing that really seems to be moving the emerging markets have been the China's move to widen the yuan. Sasha, what's your reading on that and the subsequent depreciation of the currency?
Well, I think the move to widen the trading band was very much premeditated on the part of policymakers, but timing was a question. I think seeing it when we did was probably a little bit earlier than expectations would have had it. I was expecting sometime in the second half of the year, but I think we did know it was coming. On the depreciation of the renminbi, I think a lot of it, at least what got us to current levels over the past couple of weeks, was essentially the engineered squeeze on the part of the PBOC to ensure a more balanced positioning in the renminbi market with an eye towards further exchange rate reforms, such as the widening of the band.
Sure. Sasha, also, what's your view on the emerging market currencies versus the dollar, which also has seen a bit of a pressure, and the euro, which seems to be holding around or above that 1.39 level?
So I'm still a little bit more bullish on the U.S. dollar against a lot of the EM currencies. I think we still have a good amount of political risk out there, which tends to hurt EM a bit more than you would say the G7. And certainly I think Asia, considering the sentiment towards China currently, is probably looking a little bit weaker against the U.S. dollar from current levels, at least according to my forecast. Euro's had a pretty impressive run. I think we're starting to get up to levels that are going to probably cause some ire amongst policymakers if we see too much more appreciation there.
Alok, what is your sense? Let's talk about the international markets yet again. The dollar has not been able to breach 80 on the higher side. I mean, of course, today seems to be a better day because of the FOMC meeting. But how are you looking at India in the emerging market scenario and versus the US dollar?
Well, US dollar per se, if you look at, and compare, in context with the Indian rupee, if you look at, the reason for which the most of the emerging market currencies depreciated against US dollar last year, India has improved its all those things. We should talk of current account deficit. There is a willingness to control fiscal deficit. At least on paper it looks like. All that which led to the depreciation. Your import cover has improved. So all the factors which led to the emerging market fallout in 2013, for India, those things have improved. The only thing which is still remain is the QE tapering, but now that since it is spread out and market has already adjusted to the expectation, and 10 million kind of thing is market is more acceptable. Yes, it has a bearing on the liquidity going forward, but immediately, if I look at India versus other emerging countries, I think India has improved quite a lot, and if it sustains that way, I think India will outperform the other emerging market vis-a-vis dollars. Though the dollar data, if you look at the US data, has been okay, and then which gives us a sense that they will continue with the tapering which they have been going on, which is roughly $10 billion. But if you look at the emerging market back, I think India has fundamentally things have improved, and if the new government comes with a agenda to reform things, and I think if they are able to roll out that, I think you will have a better rupee than at 50, at 61, 60, better than that.
Fair point. Vijay, what's your sense on the currency now? Because we are headed into the FOMC event now, and do you see it giving some choppiness to the currencies?
I think it will, Manisha. Volatility is always a given. Let's also not forget we are heading into the end of the financial year. So here again you'll see two-way moves in the rupee. I would still bet on the fact that before 31st of March you are likely to see one small spike on the USD INR, and given another 0.5% to 0.75% of a decline in the dollar, I would still buy the USD INR for a small blip up, maybe up to 62 odd levels.
Fair point. Sacha, let's get in your final word on the currency as well. What's your short-term view on the rupee?
The Indian rupee, I think, has been exhibiting an impressive degree of stability considering the events going on in the external financial market environment. From my point of view, fundamentally, the currency is not necessarily something that I'd like to get bullish on over the longer term, but in a shorter term basis, I think there's a very good argument for the rupee as a vehicle for a carry play. And certainly the yields that you can get out of the rupee compared to the volatility is now much more attractive than it has been in the past, and fairly attractive relative to the rest of Asia.